What up everybody, welcome back to Royal Blu FX. In today's video we're going to go over some of the trades that I've taken last week, which was Thursday the 13th of October. So we're going to do a quick recap video on those trades that I've taken on US30 index. So let's do this.
This time, tell me what you think about. When I'm not home, do I go out? In the city that I love, gotta show out.
Alright, so a lot of you on this channel know that we always scalp. Primarily we scalp most of the time. Sometimes we do long-term trades, but that's a very rare. Let's begin with the trades that we've taken on Thursday of last week on the 13th. All right, October 13th on Thursday. So right here, we did a video here last week for last week Friday, which is the video's already up, so you'll see it over here if you want to see the recap video for that. But we're going to go focus on a Thursday one, which is the 13th. Let's go right down here. I'm going to cut the market over here and splice it over here, and we're going to talk about why I took all these trades. Okay. All right. So normally when I always start trading, some of you may know, or most of you may know, I always map out the liquidity on the higher time frame. And it's important to do this because we know that liquidity is what generates the move or pushes, the move. A lot of you may or may not know liquidity, but let's just say for those that don't know liquidity, when price goes against, right, comes down here, takes this liquidity, it liquidates this huge move right here, comes and mitigates, and then pushes the opposite way, right? Now, so what I did here was I took the liberty to map out the liquidity. You can see there's two buys. There's a buy here and another buy here. And then over here you can see a bunch of liquidity sitting right above the high over here. So I did the liberty to mark out my supply zone over here. Now this is a funny story, which I'll talk to you guys in a few seconds on this right over here. But so that's what I do. I map out all the liquidity, what I can see visually, and then that's it. So then what I do is I scale down to the 1 minute like this, and then I start seeing if there's any more liquidity in and around this area. Now when it was Thursday, okay, it was Thursday when we started here. Let me just shift this a bit over here, okay? And so Thursday, I trade the US30 Open, the New York Open. And so when the New York Open comes, it starts here at 4:30 p.m. So if I take my crosshairs and I put them right over here, you can see that it says 1617 right there, right? If you keep going up, it'll say 1620, 1621, right? We're gonna get to 1630 or 6:30, excuse me. Now 6:30 is my Los Angeles time, to be honest. But anyway, there's a huge story behind this. I'm in Russia right now, but I use the Los Angeles time here on my charts because I'm adapted to that and I know how to use the Los Angeles time here. Anyway, long story short, it's 6:30 here, and that's when I start trading. Okay, so that's the New York Open. Now let me just kind of tell you quickly about this trade here. Normally, this is the weird part about what the markets do here. Sometimes when price starts to react so aggressively and so fast here, at around 3:15 or 3:30, I believe here it's, let me see, it says 5:30 here, so this would be 3:30 for me here in Moscow, Russia. So what's interesting is I already had everything marked out here, and knowing that the market doesn't open at 6:30 a.m. Los Angeles time, okay, when I would normally trade, this happened here. I had a bunch of liquidity set over here. I had my supply zone here. Obviously and evidently, I never put an alert here for the markets to tap me to take me to sell this. But I just wanted to show you how obviously when I had this set, the markets just tapped and went bearish, only because price came and took liquidity, and then it mitigated this huge supply zone here. Okay, now if you can see over here, I had some more liquidity set up here. Now I know for a fact that price was either going to come out all the way over here at the high of the liquidity, or right over here, because this was the area where price give us so much supply, right? And there's so much internal liquidity in here happening now, building up, that I had an idea that I was thinking that, well, this is probably where my next sell is, right? If not, then price would probably come above, take this liquidity and come above and mitigate this order block over here. So in any case, as you can see all the way over here, price did mitigate this supply zone and also mitigated that zone, the supply zone all the way above that I didn't mark out. Anyway, so let's go to the trades that we've taken here, okay? Because we're here to talk about these trades that I've taken. So what am I looking at here? So as you see on the higher time frame on the 15-minute, okay? What I did took the liberty of seeing is I marked out the liquidity here and here, right? I also zoomed out and I saw, okay, well, where's more liquidity, right? You can see right over here, there's more. There was a low here. There's more liquidity right at the low here. If I just zoom out here, I didn't mark it out, but I could see it. And sometimes it's good to mark them out when, you know, just in case so you can see everything, right? You can see there's so much liquidity right at the lows right here. Okay, and so this also gave me the idea that price was actually coming right down here. Now it took out all this liquidity, as you can see, right? Mitigated this order block over here, and price pushed bullish. Now, forgive me for my you know, for the charts looking so messy, but just bear with me here. I'm not entirely looking at everything here, right? Because all these were trades that I've taken, and I left them for the purpose of doing a video like this. But we're just going to be focusing on this little part of information, this little data over here, okay? So once price took liquidity, it mitigated right over here, okay? And then I just quickly went down to the lower time frames, to the 1 minute, like this. Then I had to decide, what are we going to do? Are we going to be buying or selling? Now, knowing me, I usually look at order flow on the 1 minute. If I can't find order flow on the higher time frame, then I'm looking at order flow on the lower time frame. This is the 1 minute right now, and order flow was here. Let's just take this. Let's get out of here like this. All right, bear here with me for a second. Right over here, okay? So I want you to see this, okay? I saw that price was going bearish, and knowing that I'm scalping and that I'm a scalper, I always I look at the lower time frames and I enter on the lower time frame, like extremely low time frames on the 5 seconds. So if you look at this area here, notice what's happening here. We were going bearish. There was a high, there was a low, there was a high, there was a low. Let me make this a little better for you guys. It's a little bit flat like this, okay? Something like this, okay? So you can see there's a high, there's a high, there's a low, there's a high, there's a low. So my anticipation here is to think I'm looking for sells, not buys. But evidently we can see that we're touching a major demand zone, and whenever we're touching a major demand zone, price should, of course, reverse and go bullish, right? Well, again, in my eyes, I see this as bearish right now, right? And as you can see over here, what I did was once I saw a break of structure right here, I had to apply the liquidity. Now again, liquidity is so important because that's what drives the markets, right? It drives the market bullish or bearish. So what I did was I saw that there was a sell here, a major sell, and another sell happening here. So there was liquidity here, which I didn't mark, but I marked it as a little line right there, right? And once I saw liquidity, I looked at the last high here to see what price was doing. So what I did was, let's look at 630, 622. So I'm going to go zero in on that, close to that 630 time when price came there, okay? Let's go all the way here. All right, right over here, we would go right there, okay? So watch this, okay? So here's all my liquidity. There's price mitigating right over here, and this is what we're expecting. Price was here at 629. As you can see, 629, right? It's close to 630. What I was trying to do here was trying to trade with the intention of the order flow. We had the 5 second order flow pushing bullish, okay? Now, mind you, 5 seconds is my entry time frame, and what I'm trying to do here is looking to enter, right? So you can see that I'm seeing the order flow in 5 seconds, but I'm also going to be using the 5 seconds as my entry time frame. So what did I do here? Let's say it was 6:27. I usually jump on the computer at 15 minutes before the market open. I saw price broke bullish over here. We had a break of structure. Price went bearish here. I didn't really see liquidity in here to drive price up. So what did I do? I had to be patient, and a lot of this is just being patient, waiting for your rules to be met. Okay. So again, price respected this this demand zone. We saw this price push above here, breaking bullish above this wick high over here, which tells me it's a break of structure. Right now, we waited for price to retrace. Now I'm not just trying to go and enter in right away. What I'm trying to see again is where is liquidity, because I know if I see liquidity, it's going to drive the markets to that intended direction. Right? You can see over here we had a low, high, and then another low and another high. right here, you can see where I had marked my liquidity area. There was one buy here and then another buy here that failed to break this high, okay? This low over here, let me just zoom in here. You see that low? Okay, this low here failed to break this high, so instead it flipped and went bearish here, taking out all this liquidity. So I know this is the area where price took liquidity, right, and started pushing bullish. So what happened here? We broke above pretty strong, right? Breaking this high over here, this above this wick. If you can see my crosshairs right there, you can see that it broke above that wick, which told me that was a break of structure. And that's our type 2 break of structures. If you don't know what that is, then you should check out our course, guys, because that's where we teach what the type 1 and type 2 break of structures are. Okay, so once we have that type 2 break of structure happen, then I knew immediately that this is my order block, only because we had our liquidity taken. Price broke above this high here, came back and mitigated, and then this is what gave me the assurance to take this buy to target this high, this supply here. Now, why would I be targeting the supply and finishing up there? Well, that's because we have a bunch of liquidity here, and we know the intention of the markets, that when the markets the markets go after liquidity, whether it's internal structure or external structure. Okay, they take internal liquidity and external liquidity. So this is considered to me as higher time frame internal liquidity that price is going to take. And once it has taken it like this, right, my intention is knowing that now on that higher time frame, the price is going to take liquidity and is going to be my internal structure, internal liquidity, and take price bearish. Okay, so what did I do here? I use my Fibonacci tool right here, split my risk in half because I can see that my zone, my risk here is way too big, and I cannot for the life of me take a huge sell like this, a huge risk like that, and risk so much, right, and then lose a bunch of money if the trade went against me, right? So I typically cut it in half, right? You can see that my risk zone is just a bit above this the equilibrium line, right? Just to give the market enough time to react, right? If prices should go bearish, I'm looking for prices to react like this, right? And maybe potentially wanting to take me out, right? Had I not had my risk just above that 50% equilibrium, because we know that a lot of traders trade at the 50% equilibrium, and the markets like to go there, right? And the 50% equilibrium is really pretty much like that decision area where orders start to switch, right? They're either going to be bullish or bearish. So in this case, you can see that price never reached that 50% equilibrium, right? Respected the open right here of the zone, which I typically like taking entries from. And then I just risked 0.5% here. I didn't risk 1 whole percent. And then as soon as I entered, I held this, and I wanted to hold this for the long haul over here. Let's go over here so I can show you. Right over here. You can see I had more liquidity over here. So my anticipation was that prices should come right down here at this area, because again, we know that prices are going towards liquidity. They love going towards liquidity all the time, right? Now, a rule of thumb, okay, whenever you're trading, you want to always trade away from liquidity. You don't want to trade towards liquidity. Now, it's both, but here's the thing though, it's both. Excuse me. There's it's true to some extent, okay? But the way I like to trade is to trade away from liquidity, and if I see any liquidity, external liquidity, like right here, I'd like to trade towards it, okay? So what is happening here? So I took a sell here, okay, and I held this, and I was holding, and I took partials here. And by the way, I always take partials when I enter any of the trades, right? And the reason why is because I've done a lot of the hard work. I want to pay myself at least some, right? I don't want to enter this and then hold it for the long term and then maybe see if I get lucky to take this profit, for the market to come in, tap this target over here, right? Because what if prices reverse and go against me, and then I'm thinking, oh shoot, I regret that I didn't take out that, I didn't take out that, didn't take out my, excuse me. I would regret that I didn't take off my trade, or at least take some profit from that trade, okay? So, I take about 50% of the way. I take about 50% of the profits, right, and I let the rest run. And the reason for that is because, again, you don't know if prices are ever going to go against you or actually come and hit your take profit, right? If they ever come and take your profit, which will be amazing, right? We let the whole thing run just so it can give us extra, extra liquidity in the markets, to make some extra money, extra dough. Now, prices went against me like this, right? Now, guess what happened? I broke even. Now, the reason why I break even here is because I won, I made money, right, about 50% of the way, and I also broke even, which means I'm a win no matter what, right? So we got to get this through our heads, because a lot of people think, oh, okay, break-evens are bad, I didn't make any money. No, break-evens are good. You want to be breaking even, right? The worst thing is having a loss, right? The whole point of trading is to control your losses, right? Just control and manage your money. And so that's the whole purpose of trading, right? And if you can't get your head behind that and past that, then you're not going to understand. Then you may not understand why I'm actually taking partials in the markets, right? And so, like I said, it's very crucial and important to take partials, because you get to pay yourself for that hard work. All right, so here's what happened. So why did price go against me? Well, of course I know why, and it's because prices came here at this huge demand zone. Right now, I didn't have to trade this sell here. I didn't have to look for a sell and trade this, but I did, only because I'm scalping. Right, I'm trying to get in. I'm getting in and getting out right away. I could have waited patiently for price to show me something here, like for prices to break this high here, then to show me the true direction if prices are going bullish here, because we know the intention of when price mitigates a huge demand zone like this, we know the intention that price wants to go bullish, right? So we took partials, right? We broke even here at the rest, and then we looked to reanalyze this again. What is the market doing? Let me just kind of do this, okay? If I just do this, you'll see what's happening. So I took the liberty to look for another sell. Why did I do that? Okay, if you guys remember from all my other videos that I ever talk about, I always think about and talk about liquidity, okay? So you can see that there's a huge liquidity area here where there's a huge sell from here, right? Price is sold here, and there's another sell here, okay? There was this high here that failed to break this low, therefore it created more liquidity in the in this area here, right? On this huge high and this huge low structure, okay? So my intention is to look for sells here again, because we're still a sell. We haven't been a buy just yet, okay? Let's zoom in here and you'll see what my entry criteria was right over there. All right, so typically when price takes liquidity, I look for prices to break, to give me a chalk, right? A chalk is a change of character. You can see that there was a chalk right here. If I zoom in, let's go in here. Okay, you can see that there's a low, there's a high. We got that chalk, that's our type 2, break a structure. And you can see I marked out this line here as liquidity because there was a sell here and another sell. And typically when there's double tops, that tells me there's a sell. The markets may kind of sort of creepishly come right above here once price breaks, right? Like that, and then take advantage of this liquidity and then go bearish, right? So on my entry criteria, I always look for a chalk, but I also look for liquidity just in case the markets do come after it and take it, right? So hence as to why I had my risk zone put right above here, right? Just so that if prices do come up, it would take the liquidity and go bearish, right? We had a flip zone. This is a flip zone. You see this buy here. Price came and then broke the new low. So this was a flip where we had this low here as a failed reaction. I never broke this high, and it flipped. So I sold here, staying confident in this trade, knowing that, okay, we're following our rules. We pay ourselves, again, about 50% of the way, and then we just let the rest run, okay, due to the fact that we don't know where the price will potentially go. We have an intention of where it should go, but we can't say, oh, that's where price is going to go for sure, right, for fact, right? So this is what happened, right? So I'm in it, and I'm like, oh, great, good. And then look what happened. It barely even tapped my low, right? So what did I do? I paid myself a little bit more. I was like, great. All right, let's wait for the rest of it. Let's see what happens. And then price just went against me like this. And I was like, oh, goodness. We had to break even twice. This is another break, okay? Again, it's not a bad thing to have a break even. It's just knowing how to control your trade. All right, a lot of trading is just managing your trade, right? This is, again, if you're trading if you're buying real estate, right? If you're in the real estate business, you got to manage your properties. You got to be able to make sure you're getting the best quality out of the real estate, right? If you don't manage it correctly, and you're gonna have bad tenants, and you're gonna have bad, and your service is bad, no one's gonna want to stay in your tenants, right? No one's gonna ever want to stay in your real estate, right? In your houses or whatever. So you got to make sure to be managing this, right? Your trades correctly. All right. So what did I do here? All right. So I looked at this again, right? Knowing that this high never broke this low, I was still telling myself this is still a sell. And the reason why is because we still had this liquidity taken. I treated this as the aggression here. Okay, when we have the aggression, I typically wait for the liquidity to form. So what did I see here? There's a lot of liquidity here, as you can see. Boom, right here. Sell, sell, sell. When price goes and takes that liquidity, we trade away from it. And therefore, here, price came and mitigated, or excuse me, did it mitigate? It didn't. No, it didn't mitigate, because this is where I was looking for price to come up, right? Now, this is the weird part. I was adapting to structure. And you can see that this high here went all the way up, and guess what? Took out this liquidity right here that I had marked. And then price came and showed itself aggressively here. Once I see that aggressive nature of the market, then I come in and I take a sell from it, okay? So I was like, this is great. I'm in it. I paid myself 50% of the way. Let's see if we can hit this low at here at least, only because we have liquidity here. Okay, you can see how my low was right below here. I'm targeting liquidity. Let's see if this tagged. Okay, so price did come just right here, but let's see if it actually did. Nope, and it went right against me, right? So again, I paid myself 50% of the way, paid myself a little more, waiting for price to come and tag me at the low. Again, it didn't touch me. It didn't tag, didn't hit my profit. And again, I broke even. So I had 3 wins, but I also had 3 break evens, right? Essentially, they're actually wins, right? I'm actually floating in real good profit here. Okay, and again, the whole idea here behind trading isn't to be greedy in the market, because a lot of us are like, no, I want to make this money. I want to make this money, or else I'm not going to get out of the trade, right? Well, hey, let me news flash for you. If you're in the trade and you haven't taken your money, that money isn't yours. It's the broker's money, right? It's the market's money. It's not your money. So until you have a break even, or excuse me, until you take some partials out of that out of the market, it's not your money, right? So right here, let's see what's happening. So prices are pushing bullish over here. So my intention is, okay, what am I doing here? I'm back on the 1 minute. I got to see what's happening, right? Prices are really weird here, because you can see that this is really a high and this is really a low. There's a high, there's a low, there's a high, there's a low. Okay, so I know we're still looking for a sell, at least part of the way. I could have looked for a buy, but once you start to scalp, here's the weird part. Once you start to scalp, your brain starts to think about scalping only, at least in my perspective, because when I'm stuck on scalping, I don't think about looking for long-term trades. And this one would have played out amazingly, because fortunately for me, prices reacted very nicely here from this demand, and performed really nicely bullish here. So of course, that's because I'm scalping only. I'm not taking long-term trades, okay? So why was I looking for a sell here? Well, that's because prices haven't really they have broken a high here, but at the same time, you can see here, we've had a lot of more liquidity taken from the markets right here, right? And again, what do we know? When price takes liquidity, when the markets take liquidity, they generally go back the opposite way. Let's go over here to the 5 seconds. Let's play this a bit fast here. All right, let me see if we get the appropriate setup here. Okay, right here. So my intention here is I see that there is an aggression happening. Okay, we had that liquidation process, and there's that aggression process now. We also have that chalk presented here, high break, low break right here. You can see this is the last up move before the major move pushed down, and so this was my intention, was to look to enter this area as soon as price tapped. Now once price tapped, right, I wasn't just selling it off here immediately. I saw that we had liquidity right there. Price tapped, and I know I was looking for price to price to settle in that zone because I didn't know if price was going to go push bullish. So once I saw price settling in, that settling in is based of candles creating, smaller and smaller candles, indecisional candles, okay? And then once we saw some aggression, we took that sell and then we just entered this market, and then we just stayed in this market. Right now, again, I pay myself half of the way, 50% of the way, guys. Always pay yourself 50% of the way. You can see my intention was to target the slow here because this is where the origin of this demand zone came from, right here. Excuse me if I just back up here. Okay, right there. Okay, so I was looking to target this area, and I paid myself part of the way. All right, stayed in it. I'm like, all right, come on. I cannot. I was telling myself I can't have another break even. I haven't been breaking even yet because I'm still in this trade, right? So price is going in. I'm like, this is good. And then once it comes again the second time, I'm out. If it ever touches my risk zone, or before it even touches my risk zone, I'd like to get out of the trade. Okay, so this is what happened. Okay, so let me explain the story behind this. I knew we were a buy in the long term. Okay, everything was going bullish, right? So there was no intention for me to look for sells anymore, because this high here, this high here never tapped this demand zone, and we're starting to see higher highs happening in here. So my intention was to switch my train of thought and to say, okay, where's price going? Well, we're going bullish only because we're showing order flow, right? Remember, order flow shows us, if order flow is showing, that's telling us the price wants to continue bullish. It's showing that price is breaking, mitigating. That's saying that price wants to go bullish, right? We can see there's mitigation, another mitigation, and now here is where I'm looking for my rules, right? What did price do here? Price took out liquidity. As you can see, I never marked this out because sometimes when you're scalping, you don't need to be marking everything out if you can see it clearly, right? There we go. There's this low here that came and took out this liquidity. Price went bullish, came and worked around here some more on this demand zone. I didn't sell it. I didn't buy it off quickly. What I was waiting for more aggression, as you can see. We had this aggression that broke above this high over here, right over here. Okay, and clearly when we have that break, this told me I was sold on this trade. As soon as it tapped my demand zone, I was quickly in this trade without the doubt, and I just stayed in. So I was like, oh, this is great, paying myself about 50% of the way. Now this trade, this is kind of funny. I didn't hold it this long, to be honest. I wanted to target this high right there, and so this was where I wanted to target this trade, right? Now watch this. My original target was actually somewhere around here. I wanted to target about 10% because sometimes my minimum percentage is 10%. So if you can see here, we're reaching about 10% right here, right? Let's go over here. Okay, see, it tagged our 10%. So I was good, right? Once it tagged my 10%, just notice that I was taking partials along the way right over here. I took partials right about 50% of the way, and I let the rest run. So my key here is to let the rest run. I know that now the market is going bullish the whole time, right? But you can see here, watch what's so interesting. I was also scalping while I'm on this trade. I'm still in this trade, right? I took most of the capital here from this trade, but I still want the rest to run just so I can liquidate it and make more money if price should ever go bullish. But if it doesn't go bullish, I'm going to take it out here at break even. All right, so let's go here. Okay, and look what's happening. So this is the entry here because I'll explain why. Okay, right here, I never marked it out, but it's here. Okay, there's liquidity right there sitting. Price took liquidity, went up, broke bullish like this. All right, we saw that aggression, and then it came and mitigated this high here. So I knew this wick here was my last up candle before the major move pushes down. And so price tagged it, and then that's when I went on the 1 second, I believe, to enter this. But really, I had my risk appropriately put here. Now, if I go to the 1 second, I'm afraid the market's gonna take me out because I'm way back in the data on this market. But I just want to show you, I was targeting this low only because this high never broke this low here. Okay, and as we all understand, we can never. If we're going against the market, we can't go past this low because nothing below this low is guaranteed. Okay. okay? But we will target where price has always been, and there we go. Price TP'd here, right at this low. We TP'd right there, and we got our 6%, okay? So we paid ourselves at 3% and let the rest run at 6%, and we got all our money's worth on this trade. Oh, shoot, I have 10%. Okay, hopefully I can do this video quickly before the 10% of this video, or excuse me, 10% runs out on this laptop, okay? So here's what's happening. I notice again that price, there's a low, there's a high. We had this low broken, we have this low breaking this high, therefore we have that chalk formation, so we're looking for prices to go bullish here. So my intention was to say, okay, hey, if that happened and this low is respected, I'm looking for this low here now to show me some order flow, right? We see that we had a change of character from here. Okay, it started from down here. There's one break, two break. Okay, there's a third break, and then here you can see I'm marking out all my liquidity before I took this entry. Actually, excuse me, I took this entry right there, but I saw liquidity forming here, so I was kind of thinking, okay, geez, normally I like to wait for price to come here at this demand zone because this is where I have my demand zone marked. So if it should ever come against me, I will have to get out and re-enter this market at a better price. But there we go. Price worked out at its best only because there was order flow showing, right? Sometimes price doesn't come after liquidity right away, and it just follows the flow of orders and it goes in the intended direction that you're looking to trade. So I TP'd there, and that's where I finished the whole entire trade. Now, let me see. I don't know if I took any more entries here. Oh, yes. Let's play this. Okay, it's going to be a little slow maybe if it goes a little fast. Okay, let's play it faster here. All right, so what did I do here? I zoomed out and I was telling myself, all right, let's see this thing on a grander scale. We can see that there's a buy here and another buy. This buy here is failing. You can see it's failing because this low here was supposed to break that high and it never did its job. So what happened was price came all the way back down like this. Notice I created, there's so much liquidity creating here right at this low, right? And then it came and mitigated this low, and now what was I expecting was an aggression to happen in this market. Right here, we have this break, as you can see clearly, right here. Okay, just right there, you can see that as a break. Now, I wasn't just taking a buy right away. What I was waiting for is for price to create liquidity. Okay, you can see there is actually liquidity in here, but there's also more liquidity forming in here, like this. Okay, so I was waiting for all this liquidity to be taken. Once it was taken, then I had to wait for a price to settle, show me some bullish intent or some bullish intention, and then I would go and take this trade, right? So I took this buy knowing that prices should go up. Okay, notice how price is going bullish. I had to pay myself 50% of the way because, as you can see here, let me just take this. Okay, I was targeting this high here, so I paid myself about 50% of the way. Right here. Okay, and once that happened, then I was like, all right, let's see what happens next, right? I'm looking to target even higher prices from here. As you can see, price came and teased us very low at our break-even point, so we were about to get out of this trade, but then sure enough, price stayed in here, right? And then it started breaking above, and I was thankful. So now what are we doing here? We're positive still on this trade, and we're positive on this trade. We took 50% of the way, and we're staying long haul. We're long hauling this right now. Okay, we're staying in this on this market. Okay, so price is going up. All right, let's adjust this. Okay, and then here's where the magic happens. Okay, so I was in these trades, and all three trades here. Right there, okay, and this is my last trade that I was taking. Excuse me, let me take this off here. There we go. Okay, I just repeat the process over and over, guys. It's very simple. We had to break a structure. We're following the order flow here. We can see that we have a lot of liquidity. This was the last push. There was a low. There was the origin of the low. Price pushed above, created more liquidity. So my intention was to say, okay, hey, after liquidity is taken, we know price has to go back the opposite way. Now, all I'm doing is just being patient, right? Notice how I'm not like just entering right away, right? Once price touches our demand, I have to see some more confirmation. And that confirmation is the sign of the chalk. You can see that there's a break right there by that wick. That's our type 2. Okay. right? And then price just came back. So once the wick happened, price came back and tagged something here. I entered this on the 1 second, by the way. And you can see that I had my demand zone placed right here. Once I entered this, again, I'm targeting this high right now. You can see that there it says TP1, right? And I'm paying myself, right? I don't care what it is, I'm paying myself about half of the way. Let's play this a little fast before. Okay, there we go. Okay, so I paid myself, and then I took a lot of my profit up here as well. So again, what am I doing? I'm just staying in this market now because I'm thinking to myself, okay, prices should go bullish, right? We should go and tag the high. Oops, excuse me, it's going a little fast. Okay, right? And so again, what does price do? Price comes all the way back down here, and I'm being teased again at my break-even point. So I'm thinking, okay, well, I'll break even obviously if the price gets to this area, and if the market comes all the way back down here, I'll break even, and if market gets all the way back down here, I'll break even as well, right? But again, as far as price is going, as far as I'm concerned, price is going bullish here for me to continue milking out this the markets, right? I'm milking it out. Every time it goes about 3, 4, 5%, I'm still milking it out. As you guys can see here, we had a perfect TP, excuse me, right here. Perfect TP of 35.8% on this one. We had a 22.6% on this one, and we had a nice 33% on both of these trades, okay? So it is definitely possible, guys, to be taking all these, these TPs, these nice TPs, right? If you just know how to trade the market and what you're seeing, right, guys? I hope you guys enjoy this video. Please throw a huge thumbs like on this channel, and definitely consider subscribing because we always leave out free content. Until then, guys, I will see you in the next.
This time, what you think about?